Today we are joined by Joss Tasker, founder and CEO of Sync Savings.
By a bit of a twist and turn, it ended up at BlackRock. I was lucky enough to be sort of headhunted to go to Monzo, and I was the first sort of compliance person at Monzo.
You want to make savings regular and automated, as simple for consumers as possible, which I think is so vital.
Yeah, it's really exciting, and I think we see opportunities for embedded savings everywhere, obviously. The UK cash savings market is, I think, extremely dysfunctional. We've got an enormous regular cash savings problem in the UK, which is very well documented.
What is kind of the future vision for Sync Savings?
We want to be the leading provider of cash savings infrastructure. Financial resilience in this country has never been so low. So a quarter of British adults have no savings at all.
Hello and welcome to another episode of Fintech Diaries. Today we are joined by Joss Tasker, founder and CEO of Sync Savings. She has led an amazing career so far and we're going to be really excited to learn all about it today. So yeah, why don't you do a little bit of an introduction, Joss, if that's all right with you?
Sure, thanks for having me. Excited to be here. Yes, I started out in international law and I went to law school in The Hague and worked at the Commonwealth, and then by a bit of a twist and turn, it ended up at BlackRock, opening, went to the dark side, opening markets for iShares, and it was super exciting. We were launching loads of ETFs in very short order, and I really loved it, and I love the fintech, I love the pace, but I was sort of searching something that was a bit more ethical and like aligned with my personal values, and that's when I found Octopus, when it was just an investment company. I think I was employee number 140 or something like that.
Oh, wow.
And I absolutely loved it. I still absolutely love Octopus to this day. I'm a very proud shareholder. And then I was founder of Octopus Labs, and we spun up a bunch of fintechs, and one of them was a cash management platform.
Wow.
And a bunch of other things. And then, so that was my first foray into cash savings, of which more soon. Yeah. And then I was lucky enough to be sort of headhunted to go to Monzo, and I was...
That's right.
Yeah, I was sort of a fairly early Mondo user, and that was kind of an opportunity that I couldn't turn down.
BlackRock to Monzo must have been quite the jump.
Quite a jump, yeah. It was great. So I was the first sort of compliance person at Monzo, so I set up the whole second line team and looked after quite a lot of... set up the team and dealt with the regulator. It was fairly choppy waters, but it was also an amazing time. It was super exciting.
How big was Monzo when you joined?
Oh, it's a very good question. I think it was probably about just under 300 people.
Okay.
So it was just before we got the banking license. Yeah. And then because of my experience, I basically ported across the same model for savings pots at Monzo. If you remember, we actually were an aggregator, didn't hold on to people's cash, wanted to engage when people couldn't necessarily afford to hold large amounts of retail savings, and savings pots at Monzo are still a brilliant product to this day, which I still love and use. So I had a brilliant journey at Monzo, and then at some point I had two very young children, and it had been locked down. So I'd be on my, that would have been very intense. There was a lot of regulatory change in that period that we had to put through. So then I set up a consultancy, and I worked with banks, helping them with licensing, and also fintechs. And I thought, you folks need each other. And that's where the nexus of Sync.
Yeah, and then talk to us. So you are now the founder and CEO of Sync Savings. I'm really keen to understand the problem you were seeing in the market, and then how you went about seeing that problem and then forming Sync Savings.
Yeah, so it's the UK cash savings market is, I think, extremely dysfunctional. We've got an enormous regular cash savings problem in the UK, which is very well documented. We know that 400 billion of retail cash savings is earning less than 1%, predominantly at high street banks. Most people have savings, 77% of people have savings next to their current account, and that's likely to be earning very low interest rates. Meanwhile, most sort of challenger or mid-tier banks distribute through 4 distribution channels, which is all powered by money facts, so those Best Buy tables, but only 5% of people will shop for rates there. And so you have this massive disconnect between 5% of people are getting incredible rates, but they have to be very friction agnostic and very rate hungry. We are seeing lots of a kind of challenger and neobanks making that easier, but then the vast majority of people are not regular savers, which is the reason that financial resilience in this country has never been so low. So a quarter of British adults have no savings at all. Over 50 or 60% of people couldn't cope with kind of serious income shocks. And we think regular saving is just much more difficult than it needs to be. So there's a real issue with helping everyday people to save and save regularly in a way that is really automated and really smooth and seamless. And then, of course, you have... So there's something like 282 deposit takers in the UK. There's sort of the big 9 and a few other flavours, but the majority of those pay kind of 3 or 4 times more for liquidity than the high street. So we hope that we're solving problems on both sides of that equation. So helping, and I'm really excited particularly about the mutual sector, which obviously the Labour Party is really excited about, helping that sector to do more in their community by helping them to access larger volumes of retail deposits and obviously and also helping people to save more.
Yeah, nice. So in terms of how Sync Savings is sort of works, and I think you've really nailed quite an innovative approach with how you're tackling it. And it's sort of you're not just going after the banks, but also kind of embracing the kind of the distribution channels that you mentioned. And yeah, just tell us a little bit more about how, you know, what actually it takes to rebuild that kind of cash savings infrastructure. Yeah,
it's a great question. I think for us, the answer for everyone is distribution. So really for us, what we're trying to get to is, can you surface a great savings product for someone with a good market rate at what we like to call that moment of intent? So when somebody's thinking about their future or thinking about their money, can you make it really seamless for that person to switch on regular savings? So that's why we're targeting mostly employee well-being and payroll savings and pension providers, where we can easily access people's savings at that top of funnel moment. So it comes straight out of your pay, it's in a pot, but you can get to it if you need it. But the magic is in the background, as you say, and that infrastructure piece consists of APIs which drive core banking engines of our partner banks, so that we can open near instantly individual retail cash savings accounts with their own individual sort codes and account numbers in a matter of seconds. So that requires us to have a compliance layer, a KYC layer, transaction monitoring layer, payments layer, and then obviously those deep technical integrations.
Yeah, and I think the kind of pieces that's really honing in on is making it embedded, making it convenient, which we know are two of the biggest kind of issues when it comes to savings. Which is really great to see. And I think you mentioned before, you want to make savings regular and automated, as simple for consumers as possible, which I think is so vital. Yeah,
it's really exciting, and I think we see opportunities for embedded savings everywhere, obviously, but there's some great use cases. So alongside our kind of core business, which is around payroll, employee benefits, pensions, we're also doing a small trial of Save Now, Buy Later from a retail perspective. So a holiday provider will give you a discount if you save up for your holiday with them rather than saving up in your current account. You can unlock, upgrades as you work through your savings journey, and then you get a discount. And that's just a really lovely way of saving in a way that means that the retailer can really engage with you and get you excited about your holiday. You get the dopamine hit, and yet you're not going into debt. You can see your savings increase over time, and you're spending more time on that website. And then after you go, you get your interest, and they go, oh, look, you've got 50 quid in your account. You can withdraw it, or you can put it towards your next holiday. And it's just a great way of making savings rewarding.
That's rewarding, and it's fun. I mean, there's nothing more unsexier than just kind of depositing an amount every month, isn't there? And that kind of, you were explaining how it's all going on in the background, but really kind of the customer impact and the benefits that it's having, it is insurmountable, to be honest. Yeah, we hope so. And it's a nice it's a nice alternative to
buy now, pay later, or the two things maybe can work alongside each other. So maybe you're saving up for a house renovation. You want to save part and borrow part, but you're not going to, start renovating your house tomorrow. You're probably thinking about it for a while. So interesting to start a savings pot, or maybe you're going to save with Wren Kitchens, and then you're going to get a discount on your kitchen, and they know what you're having and when it needs to needs to be installed and when you need to pay for it.
Yeah, and it's then instilling all those habits in people, but in an actionable way, rather than just, here's some financial education, kind of read this. It's let's do something in practice, get you used to saving, like you say, making it more exciting, making it fun. So it must be nice doing something that is like for the good of the consumer, but also it's great for the businesses and kind of everyone along the chain as well.
Absolutely. And we know the impact that even having £200 of savings has on your mental health. So mental ill, the biggest driver of mental ill health in this country is lack of financial resilience, because it causes you to take really short-term decisions, to think about money a lot more, which in turn causes you more stress. And which is why if you give someone an app where they can see their savings, some people check their savings 5 times a day, and the average is 5 times a week, even for easy access. And that's because it has that impact on giving you that sense of security.
I don't know about you, but I always regret purchases after I make them, that cognitive dissonance or whatever it's called. And I think that would really resolve anyone having that mental overhead of crap, I just purchased this and maybe I shouldn't have, and did I even have enough money, and all of those worries that you have after you purchase bigger items and things like that.
Whereas for savings it's the opposite. You can see, and what we've done loads of research into what that user journey should look like, so we're really excited to have a big plus sign and then a big green number saying how much interest you've accrued, and if you can see that increasing every day, or even if you've got a very modern bank engine, intraday, it's so satisfying.
Definitely.
And then sending people push notifications, because who doesn't want a dopamine hit saying you're nearly there, meeting your savings goal? And a savings account's a savings account, but the really nice thing about leveraging technology is that on top of that, you can build as many pots as you want. So you can say, I get paid and I want to put 20 quid in my wellness fund just for a rainy day, and I want to put 10 quid in my holiday fund, and I want to put £5 because I'm saving up for that goes to my beauty pipe subscription, and that's really important. But whatever it is and whatever works for you, it's really important being able to for financial services to have that flexibility, and we've really tried to double down on that, because we understand that people's financial lives are much more complicated than they might seem, and in general, most financial services products don't work. And in particular, I think, don't work for women. I think there's way too many dude products out there.
So true. Just in general life, I think, as well.
It's completely probably unbiased, but if it's always been in the past men building these products, designing these products, they're going to have themselves in mind, whereas getting more women involved in all these companies building these products, building the solutions, means we can get more of that fairer
I completely agree. And I've spent a long time building premium card products, and actually it's they're proper dude products. Women don't want a metal card, I don't think, on the whole. We don't smash our phones as much. Actually, I do, but most people don't. But do you know what I mean? You're paying high premium for insurance for a mobile phone that you're not breaking as much as other men in that product. You probably don't want a lot of the perks the same way that a man would want if you're a woman. And women's approach to risk is really different to men's. Women are there's a 19-year pension gap for women, for example. So there's huge gender differences in financial services overall. And I think in a really small way, we can start changing that across the board with every flavour of financial service products. But I think for particularly women who are much more likely to have volatile incomes, saving is much more of a challenge. And the way people save is really different. And folks might say, I'll give this money to my mum because I know that my mum is not going to let me have it unless I really need it, and I won't spend it. But how do we recreate that in a digital way so that it's really accessible for everyone?
A digital financial advisor is what I need, that I don't have to pay for. That would be perfect.
Free, if
free if possible.
And the impact as well, if we think of the numbers, I think you mentioned there's something like 400 billion in low yield savings accounts. accounts. So if we start getting all that money into savings accounts, 3.5, 4%, I mean, the amount of money that we're earning for people is massive.
Yeah. There's billions out there, I think, in interest for people that folks could be saving. And I think the other side of the equation is that's liquidity, which is going into banks, which they will then be able to lend. And that's really great from an economic perspective. Definitely. One hopes, and we'll see whether the Labour Party's aspiration for the mutual sector to double comes about. But I think taking advantage of those opportunities are potentially huge.
Yeah, amazing. In terms of your experience with Sync Savings then, I guess it's been a year since you have founded the company. So what are the challenges that you faced in the last year with setting up Sync Savings?
It's a really, really good question. So many every day. I think we probably... I think like every startup, product market fit. So are you building something that people want to buy is really the main thing that every startup needs to get right. So looking at what is our niche, and I think everybody says it, but it probably took us a bit too long to get there, which is you need to specialise and be very, really hone in on what is your niche and where are you adding value. And for us, I think where we think we can make the most meaningful impact, it's in kind of payroll employee benefits, because there's a natural moment of intent when you're thinking about your pension, and actually based on a bunch of trials that in particular Nest Insights have done, which is really interesting. I highly recommend you Google Nest Insights payroll savings. There's conversion of over 50%. So even when people were offered 0% interest rate, more than 50% of people stayed opted in to regular payroll savings. And it just shows how desperate people are to save regularly. Yeah. And there isn't a financial education issue around savings. And maybe that's a controversial thing to say. People don't need schooling on how to save. They just need to be able to save simply and easily. Yeah. I think.
Definitely. And that payroll piece, I think we spoke about it, would have been so useful for us when starting our careers. And it is just about making it convenient. I think we spoke around, people have got so used to then putting money away in your pension and not thinking about it. Can we instill those habits when it comes to savings as well? Yeah.
And we're really passionate about that. And there's been lots of interesting insights into particularly from the Resolution Foundation, actually, that published some very interesting research into how do you get the balance right between helping people to save for retirement, but also when obviously still in the depths of this cost of living crisis, how do you balance that with making sure that people have holistic financial well-being throughout their lives, and what does that mean? And for example, there's some really exciting, innovative ideas. Should you be able to borrow from your pension pot if you need it, rather than falling on high-cost short-term credit, as we know so many people do, like paying 200% for a microloan? Should you not be able to borrow that from your pension? And even with a much lower interest rate, you're making up for any shortfall in investment income over that time period. Or should it be a bit more flexible? Should you be able to pause for 3 months if you're facing financial difficulties? But a lot of it for me is, how do you expose that data? We talked about pension dashboards as well, and I'm probably not the best person to talk about that, but how do you bring someone's pension into their financial life and give them ownership and dominion over that, and also help people to make educated decisions about how they balance their kind of shorter, medium and long-term financial wellness. And part of that picture is probably cash savings, investments, and obviously pension savings too.
Yeah, and I think what you were saying you were doing with Sync Savings, in really looking at it from the customer journey perspective, like you say, looking at women, what's the journey they want to go through? Yeah. How do they want to be engaged? I think we need to do that, like you say, across pensions, across investments. Yeah. Things were set up a long time ago in a different kind of era. Things worked very differently. Let's relook at what actually works in today's. Like you say, maybe it's a case of having more flexible access to your pensions, because so many people really need that money, and it could help their financial lives in the long term. So
absolutely. And my friend Ruth Hancock, who runs Octopus Money, she's always she's a huge advocate of looking at this like long-term savings gap. And I was really shocked. I didn't know that the pensions gap was 19 years. So it would take the average woman 19 years to create a pension the size of the average man's pension. And that's because women are obviously much more likely to have volatile incomes, where it's much harder to start saving or contribute to a pension, and which is why actually women's financial lives are so much more complicated than men's. And I think it's really interesting, this research that the folks at the UNIS Centre at the University of Glasgow have been looking at, where they've been taking a lot of open banking data and looking at financial lives, particularly of women-led households who are on lower middle incomes, and how those households manage their financial lives. And 70% of transactions are within the household, which is incredible. So there's a huge amount of thought and time that goes into managing finances, which I hope will go some way to dispelling the myth that people on lower incomes don't think about money, or they're less good at managing money. They think about money almost 100 times more than people on medium and higher incomes. And it's a lot about taking some of the pain out of that and making savings automated, and I think is a part of the solution.
Yeah.
Definitely.
Definitely. And kind of speaking of future aspirations, what is kind of the future vision for Sync Savings? And, I think we always talk a lot about open finance on this podcast. So what are the potential impacts of really trying to, I guess, embrace open finance from a future perspective? And do you have any sort of expansions and things in mind for Sync Savings that could go beyond, I guess, what you're currently looking at?
Of course, absolutely. Very much so. Yeah, we want to be the leading provider of cash savings infrastructure in Europe, and then we'd love to expand beyond that as well. We think this problem exists in most places, actually. And we want to obviously expand into different types of products as well. So savings, there are obviously lots of different flavors of savings accounts, and we think there is a savings account for lots of different use cases, like bonus accounts, for example. We love that idea that when you reach your goal, you get a bonus. So you get 3%, but if you reach your goal, you get an extra 2%. And from a liquidity coverage ratio perspective, if you can show that money's really sticky, it's cheaper for you to hold it as a bank. And so you're willing to pay more for it. So it's sort of, how can we use technology to sort of overcome some of these, what I think are quite deep sort of structural challenges, which I think have fed into, along with obviously that anomalous 10 years of extremely low interest rates, which has meant that savings products have been underused and underutilised.
Definitely. It feels as well that throughout this and throughout your kind of innovation going forward, you're really thinking about customer behaviour, the way they, like to save and different things like that. How have you got that customer feedback? Do you have kind of user groups and customer groups? How do you source that to make sure you're kind of really building what customers want?
It's a really great point. And I think, so we run sort of small user groups. We try to do a balance of like qualitative and quantitative research. Myself and my brilliant co-founders, so Alex Fox, who we were both at Monzo together, so we have loads of insights from savings pots at Monzo, and previous to that an aggregator that I worked on, so we understand that sort of behaviour quite closely, and there's loads of great learnings that we've picked up from working in fintech. But we like to look at sort of broader market research, and also some of the great research that's being done by academics. And now it's so much more exciting because you can overlay Experian data with open banking data from individual households. And I find that so interesting when you can really understand really deeply how individuals' financial lives work. And then obviously we do a little bit of our own research as well. And actually what's really exciting when we work with payroll providers is to be able to go into their to the companies they're working with the employees, and sit down with people and say, how do you think about your money? And even starting to ask really simple questions. So we ran a workshop a couple of weeks ago up in Scotland where we just asked people what they were saving for and gave them Post-its. And it sparked so many interesting conversations about what people are saving for, and it's such a topic that's close to people's hearts. A lot of people are saving for their children, and actually from some of their financial lives, it's kind of almost anthropological data, you find households where people will not pay the energy bill and go into arrears, but they will be putting money into a savings account for their kids' future, which isn't necessarily right, but it just shows you how money is social, essentially. And so that's really interesting to look at. What are people saving for? How are they thinking about saving for it? Most people aren't regularly saving for the things they want to save for, and that's one of the gaps we want to plug. So how can you increase people's wellness and financial well-being at the same time by helping people to save for those things that are really important for them, like their kids' university or that house extension or even a holiday or something fun, alongside building that financial resilience. And that's why we think, sort of obviously it's all about the product design and making productizing savings, which I don't think has ever really been done, because cash savings are liabilities to deposit takers, and traditionally people that work on that side of the balance sheet they're basically they're like a cost base. They earn less, they're less good looking. It's kind of a very unsexy side. And therefore we want to say, well, wouldn't as a bank, we think in this market or any deposit taker, there's much more profit to be made in reducing the cost of your liquidity rather than increasing the interest rate that you're getting on your assets. Yeah. Because there's that 4% kind of to play for in that space.
Yeah, both sides of the coin on that.
Yeah, if you can reduce your cost of liquidity, that instantly hits your net interest margin, makes you instantly more profitable. And the way you do that is productize your savings. So think about who your users are, what they want, how you distribute it, and really we're a one-stop shop and we can make that happen.
Yeah, I think it's just having conversations in general as well. As like, you don't really tend to sit there and talk with your friends about what you're saving for, and it's just kind of really trying to get more conversation and make it more normalized to do so, which is great. We don't save anymore. It's not in our lexicon. It's so funny. We spent so much time talking to people, and they're like, even VCs, which is really interesting, they're like, so what are cash savings? Like, how does it work? It's crazy how many people that are actually in the field,
or people that come to us and they're like, we've noticed that you're talking about this thing called save now, buy later. Like, what is it? How does it work? And you're like, it's this really radical concept where basically like you save up for something and then you buy it, and they're like, wow, it's crazy. Amazing.
I am glad that the talk has switched to that. And I know there is a time and place for buy now, pay later.
Yeah, of course,
but
absolutely.
Over the past couple of years, there was a massive rise in buy now, pay later. And I think with that, there came a lot of stats with that being quite harmful for certain people because it wasn't as well understood. Yeah. So I think having save now, buy later and the kind of conversation really shifting that way, I think is really important.
Yeah. Well, that was honestly super interesting. Can't wait to see what's next for Sync Savings.
Watch this space.
Love to get a little bit more kind of general insight on Joss Tasker. Who is she? What is her career? What's led her to kind of be here today? Tell us a little bit about kind of your career journey today, and kind of your key experiences so far. I mean, you've touched on it a little bit throughout Octopus, BlackRock, Monzo. Are there any kind of key ones that really stick out in terms of, this is why you're here today, sort of thing? And any particular
really
moments you're proud of as well?
I think I've always felt that happiest when I'm working in an environment which really aligns with my values, and I think being part of Octopus, and particularly Octopus Energy early days, has been really instrumental as well, and working for an organisation which is employee owned, which is super important to me, and an organisation which is hyper dedicated to making sure that when you win, your customers win, and you don't ever want to be conflicted. You don't want to work in a business where you win because your customers lose. And I really love that concept, and it's something that I'm really passionate about. I think personally, the opportunity to improve people's financial lives is something where I thought I could add some value, and hopefully there's also a commercial opportunity there. And I don't think the two things need to be opposed, as long as there's no disconnect between you winning and us, or Sync winning and our customers winning.
Yeah, I feel like that's when you hit the career jackpot, isn't it? It's when your kind of values and what you're doing completely align. From both a moral perspective and a commercial perspective.
Yeah, exactly.
And one question I had as well that I'm always intrigued by, how you went from having this amazing idea for Sync Savings to making it a reality. What are the steps that actually make that from this is a great idea, discussing that with your co-founders, to this is actually now a real company?
Yeah. I think it's sort of, we would discussed it between ourselves and then started to seek validation in a few places. So one of the first people we spoke to is someone called Wendy Ginsberg, who's sort of the guardian angel of Sync. And she used to run product at Monzo. She's hyper clever. She's started as a software engineer. She was at Google. She went to Brown. She's amazing.
Wow.
And we told her what it was, and she said, I believe in you. I'm going to invest. You should definitely do this. And I think that was such a turning point. And I think it's just such a lovely example of how you can do something relatively small for someone, but it changes the course of their lives, really. It wasn't just Wendy, but I think that was a real moment where we were like, wow.
Yeah, proof of concept.
Proof of concept. And then, and then we just reached out. We literally just reached out cold to a few people that we respected in that industry and said, we're thinking about this. And and that early validation for us gave us the confidence, and that sort of built over time. And then we raised the small round, and again, that was a huge confidence boost to come across people that said,
And how was that as well? Because was this just after COVID that you were then raising money?
No, it was last summer, actually, which was a strange time to raise. But we were also, I think, extremely privileged in a few ways, including that we were sort of part of that sort of Monzo bubble, which I'm sure helped. SEIS definitely helped. And hopefully a little bit of having an idea that we were really passionate about and that we had spent quite a lot of time thinking about and researching.
Yeah, brilliant.
Yeah. And you also hold a few kind of advisory roles. What kind of things do you advise on?
So from when I was a consultant, I worked with loads of really amazing fintechs from Gaia who help you ensure your fertility, which is incredible. And then obviously being really involved in the green lobby at Octopus and on the electric car side as well, which I really love. I'm really super passionate about that. So there's a kind of a handful of fintechs that I'm really involved with. I love working with, much less so these days because I'm just so busy doing Sync. But
sounds like a lot is on your plate.
It's all good stuff.
We discussed it before, as well as obviously being CEO and founder. You have 2 children as well. I guess we'd love to hear how you manage to balance the two. That's always a question that's a tricky one to answer, but we always like to ask.
I know, and I always feel a bit self-conscious about answering those kind of questions because it's a mess a lot of the time, I think, is the honest answer. And there's a bit of sellotape and string holding the whole house of cards together. But I have a lot of support. I have a very supportive co-founder, which I think is really wonderful. I'm very lucky. And I really love what I do, and I'm really passionate about it, which I think is really important because it's so hard which keeps me motivated and excited, I think, to kind of go that extra mile.
Definitely. And speaking of just, I guess, motherhood and parenthood, how kind of has it been for you to kind of navigate any sort of gender dynamics in, I guess, not just the world of work, but specifically in a world of finance and fintech, which is very much male dominated?
Yeah. I remember when I was at Monzo, I was the first person to go on maternity leave, and there was more trans people than parents at Monzo, which is awesome. But I suppose it just goes to show how I think if we do nothing, we end up with a very poor situation for women in general. I know that you have to try harder as an organisation to create an inclusive workplace in general. I've not had bad experience. Only one. I had one investor who was like, "Oh my God, you've got children." It was kind of game over for that conversation.
It's just terrible.
There may have been others that are less overt, but just one where I thought, wow. But, but we've still got such a mountain to climb, I think, in terms of
definitely
gender diversity and female investment. And I think it's quite depressing, actually, that if you're a woman and you take investment from a female-oriented fund, you're less likely to raise from a mainstream fund, which is kind of a bit sad, isn't it?
Yeah. What things do you think, like, all of us, the industry, can do to get more women involved, make things better, not just for women, but make it more inclusive generally? Do you think there are some things that could be happening, or are some great things you're seeing happening already?
Yeah, it's a really, really good question. Like, let's be honest, like, to start a business, you have to be quite privileged. Like, it's a huge risk, and women are naturally more risk averse. And taking that financial risk and that leap, particularly if you've got children, isn't easy or straightforward. And I think anything you can do to create an environment where women are supported through that process.
Yeah.
And it's not just women. Obviously, if you don't have a family you can rely on if it all goes horribly wrong. And I think, it's a much broader question around diversity, I think, particularly in terms of levelling things up, because I don't think the most talented people start businesses and get funded. Yeah. Because of structural inequality.
I guess people are scared that they won't have that kind of support to fall back on.
Yeah, because let's face it, like, most startups fail. And particularly if you're in London, you've a huge costs, and maybe I would have started a business quite a bit earlier had I not had the benefit of a good career before the point that I did.
For sure.
Yeah. Because, like you say, there's so many amazing ideas out there. We want people to come forward and, have the confidence and the support to action it. Because, I think some of the numbers that you've said on 400 billion savings accounts, or amount of money sitting in low yield accounts, 44% of UK adults stop spending to make ends meet, 4.9 million have no disposable income. I mean, the impact that the likes of Sync Savings is going to do, I think, is massive, and I think we need more of this in the market.
I think we're getting better with the help of Sync Savings, obviously. But the mountain is there
takers that are making that difference, and the distribution partners, we're just sort of linking them up. But I think there's so much impact that deposit takers, so banks, building societies, mutuals, can have on the savings side of their balance sheet that is untapped. And equally for fintechs and pension providers and employee benefits and payroll providers, the amount of impact that those sorts of organisations can have in terms of improving people's mental health is just vast, and all we're doing is joining the dots. No, I think we're both really excited to see what comes next. Thank you, it's very kind.
We are coming up to the near end of the podcast, and we'd love to do our fire round questions with you, if you don't mind. So the first question is, what do you want to be known for?
We want to be known for improving people's wellness, including their financial wellness.
Nice.
Brilliant.
For as many people as possible.
And if you could change one thing about the industry, what would it be?
I'm going to give you a really geeky answer. I'd love to see digital identities, because I think that actually is creating a big barrier to financial services, just because the cost to onboard a customer is so high at the moment. The user journeys are really ugly and janky.
Yeah.
And if there was a really simple, easy way to validate someone's identity, I think financial services would probably be more inclusive, and the unit economics would mean that more providers would be happy to serve more people, and particularly those people who have less money.
Definitely. And I think there's been quite a lot of working groups and government initiatives on this, but hopefully sooner rather than later we'll start to see something.
It's sort of, the bill had a first reading in March of last year, but I think what needs to happen is the industry needs to congregate around a framework, and that sort of needs to happen. And I'm sure there's lots of players that probably are less keen for that to happen as well, but I think the impact would be, or will be, I should say, absolutely enormous, and it will also unlock a lot of innovation as well, I'm sure.
Definitely.
Absolutely. And lastly, is there anything that you would recommend to our listeners, anything that's inspired you over the last however many years, and any kind of book or podcast or anything like that?
God, I really should have given this some more thought. Okay, it's a little bit off piece, but I'm a massive politics geek, and I would love to see more women involved in politics, because I think it is really important. So I would recommend a podcast called Electoral Dysfunction. And
oh my God, I love that.
Do you love it?
I love
There
that.
you go.
There you go. It's three
I
women
liked my list.
different sides of the political
That's
spectrum.
that's so punny.
Hosted by Beth Rigby, and it just shows a world in which people from very different backgrounds and from different sides of the political spectrum can have really deep, intellectual, exciting, fun, feminine oriented conversations about politics.
Love that.
Yeah, I love that. We need more people with differing opinions coming together. I
Yeah,
think it's
we're in this
important.
world of quite polarization,
Yeah.
aren't we? And I just love to see, and they always have exciting guests on. I just love to see female leadership in forums or in areas of public life. And God, like being an MP for a woman at the moment is hell. I think it's really tough. And yeah, it's wonderful to hear from women who have kind of got to the top of that game, and it's an interesting lesson in leadership. And I think what I love is women leaning into our femininity, maybe. And I don't know, I feel like my feminism changes from time to time, and I love to ask people, how's your feminism? How are you thinking about your feminism at the moment? But like, actually it's really refreshing and exciting to hear from these women who've overcome so many obstacles and are making like genuine real difference in people's lives.
Definitely, because I think also, like, when we think of leaders and leaderships, the stereotype is to think, be more masculine or be more that type of persona that we all think is a typical leader. But actually, it's nice to hear that kind of takes a different angle and looks at it from that feminine point of view, which could be really interesting. Yeah.
Electoral
Amazing.
Dysfunction.
I will be
Go and check
listening
it
to
out.
that.
You'll love it.
Add that to
It's
the list.
funny
Yeah,
and
love
it's
it.
fun.
Yeah, sounds funny already. Thank you so much for joining us
thank
today,
you so
Joss.
much. We loved having you on
I've
the
learned
podcast.
so much.
Definitely.
Yeah.
Oh,
Cheers.
It's a pleasure. Really appreciate you.
Thank you very
featuring me.
much.
Thank you.